Holy shit, I would have just lost it.
Good morning, everybody, and happy Friday. Thank you for joining us on Beat the Bell morning show presented by Kane Capital. We are excited to talk markets, excited to talk Fed, excited to talk macro, excited to talk everything in between. Yesterday was a pretty significant day in the markets because for the first time in what feels like a long time, the bears were in control. And the market sold off substantially, but still trading above some key levels. So moving forward, the bears are in control. That's damn right. So moving forward, we're going to be paying attention to trend. We're going to be paying attention to price action. We're going to be paying attention to daily levels to kind of play and predict what is coming next. And I think we've done a pretty good job of that so far this week. But let's get into it. Let's introduce the panel, starting with Money Manor. Manor, good morning. Glad you could actually join us on this.
Yeah, good to be back. As you said, market's looking kind of bullish here. Looking like a healthy pullback if I just looked at price action on the indices, but a lot going on under the hood here on some macro levels that we'll talk about coming up.
So on the last show, I was going through introducing everybody, and I said, starting with Money Mander, and you were nowhere to be found. So that was an embarrassing moment for me.
Yeah, I saw it made breaking news on the Fed forecast as well.
Yeah, it did. It was it sent a shock through the system. All right, Diamond Trades, good morning.
What's going on, guys? Happy Friday. Excited to dive into it. Like Manor said, we have a great segment today.
Mo Mamba.
Oh, man. Good morning, guys. Let's have a week.
For those that didn't see, we dropped the Mo Mamba interview last night on TCP. Mo, have you listened to it?
Not yet. I will though.
Well, me neither. So that makes two of us. But I definitely enjoyed doing it. I think you guys will really like that interview. Talked about Mo's strategies and whatnot. All right, next, Ramsey Rippers.
Happy Friday, guys. Let's finish the week strong. Great day to be great. Let's do it.
And last but not least, live from the city of Philadelphia, Stock Sniper.
Good morning. Great day to be great indeed. Great week so far. Let's finish off strong.
All right, let's dive right into Fed forecast, economic calendar. What do you guys got?
Yes. So let's go ahead and start with the economic calendar. Today is going to be pretty light. Really, the only things of note are going to be the Michigan consumer sentiment, which is going to be a preliminary reading that comes out at 10 o'clock. And we've also got two Fed speakers, one at 12:30, one at 4 o'clock. And then I'll round out the day. Not too much as far as data releases go today, but we have got a pretty massive week next week with CPI on Tuesday. We've got retail sales on Wednesday, and then we've got PPI on Thursday. So definitely some volatility expected to come in as we get some inflation readings on how January went, right, with regards to inflation. And we talked a little bit about this on Wednesday. So Wednesday we had the bond market, which looked like it had started to take heed to Jerome Powell's comments. And we talked about how there was a pretty long period where it seemed like the market just wasn't paying attention to anything that Powell was saying. And then finally he comes out with this speech. We get 500K jobs added. Ryan, go ahead and roll the clip from Wednesday. Yesterday at his press conference, he really just said the exact same thing that he said in the meeting, but he really, really wanted to emphasize, like, look, if this labor market problem continues to be strong, if there's a situation where it takes much longer than expected to bring inflation down to our target. And, that's really what they've been saying over the past several weeks. And the markets have just been ripping. Yields have been falling. It really hasn't made much sense. Come into last week and you have Powell come out saying, look, it's going to be a little bit of a bumpier road than we expect. Right on the heels of that, you get a super, super hot jobs report at 500,000. It makes sense now. And I think the market sort of sees more clearly why Powell isn't necessarily super optimistic on inflation coming down when you have an economy that's so strong, so hot right now, adding 500,000 jobs, basically blowing every estimate out of the water. People are like, wait a minute, maybe he's right. Maybe this will take a little bit longer than expected. So it seems like the smart money definitely started to pay attention to that on Wednesday, as we talked about. And then Thursday, the stock market followed suit. As Alejandro talked about, a really, really rocky day yesterday. We had the Dow, the S&P 500, and the NASDAQ down 0.7, 0.9, and 1%, respectively. And I think really what we're seeing is a picture that has become a little bit clearer, right? We've gotten a little bit more clarity on how long it's going to truly take to tame inflation, or at least how long the Fed thinks it's going to truly take to tame inflation, and they think that that's going to last the entire year. We've gotten a look at how companies are going to have to navigate this macro environment, right? With 77% of the S&P 500 already having reported, and Wall Street really bringing down those profit expectations for this year, right? Based off of the guidance that we've heard in these conference calls. It doesn't look like we're painting an end of the world sort of scenario just yet, but things clearly don't look as great as they did just a week ago.
Yeah, you knocked it straight out of the park. I mean, how many times had we talked about leading up to FOMC last week that the bond markets were not at all pricing in what the Fed had been saying? We were talking about going into earnings season. We really saw companies trading at high multiples here as the companies themselves are forecasting revenues and EPSs to go down. So let's take a look real quick at how the bond market's actually reacting really since that meeting last week. This is a chart of the 10-year yield. You can see where I have circled at the very start, the breakout of that bull flag back in August signaled August highs in the S&P before rolling over into lower lows. And you can see we pretty much have a nearly identical setup here with the 10-year breaking out of another bull flag just higher now on the daily time frame. So this would be one thing I'm really, really watching. The VIX has a very similar setup, just coming off of lows with a falling wedge breakout. The dollar's been showing a ton of strength, also breaking above trend line. So you kind of have under the hood of what seems like really, really strong price action. If I just were to look at a SPY chart, it really looks like we're now selling off a little bit, seeing profit taking, but now trading back down into support. But as you look at these kind of macro confluence indicators in the dollar, in yields, in the VIX, we're starting to see breakouts that are kind of signaling to me that ultimately this might just have been a rally again, a bear market rally at that, and a very convincing one. But this is typically where we see these breakouts occur on the macro confluence, where that smart money kind of leads the stock market and the stock market follows. So that'll be one thing I'm definitely watching moving forward. And I wanted to cover the 210 again, but I've covered it one too many times. So I actually found some new data for you guys this time. I found, courtesy of Markets and Mayhem, a 3-month, 10-year 50 SMA chart. So this is tracking the 50 SMA. And I know Hondo's now paying attention again. This is tracking the 50 SMA of the 3-month and the 10-year. And every time that has inverted over the last 50 years, without fail, a recession has followed, typically at a 12-month lead time. And so kind of similar to the 210 inversion, I think this one just has no exception. So it's a little bit cooler every single time without fail. And also at a 12-month lead time, whereas, the 210 typically came in at like a 20-month lead time before recession came in. This just inverted, I believe, a month or two ago. So this would be putting us at an end of 23, beginning of 24, start of a recession. That to me just kind of leads to this whole narrative that everyone thinks bottom conveniently came in like in 9 months, and we're gonna have this magical carpet landing of inflation. That to me is now just one extra factor that I'm watching on top of the 10 others to signal me otherwise.
Completely agree. I think that when you have this macro confluence, you have to take these pullbacks a little bit more seriously. We will see how this one plays out. Currently trading down in the pre-market. We'll see how we end the day and how inflation comes in next week. I think that'll be a massive catalyst to see how this plays out. That's going to wrap it up for us on Fed Forecast. We will pass it back to Alejandro.
It's about damn time you guys talk about something useful. The moving averages. I love it. I actually looked up from my phone when you said 10 SMA or 50 SMA, whatever it was. Let's go, Mander. All right. That is a perfect segue into our next segment, which is the system. So for the first time, dating back to January 25th, which was a kind of a break, but really January 18th, we broke down below the 50 SMA on the 1-hour chart. And this meant trouble for the markets, guys. Clear uptrend. Look at how many times we tested this 50 SMA on the 1-hour chart. On Monday, I tweeted that it would be very, very important to watch this level. Of course, it was broken yesterday, 50-point sell-off, really nice trade opportunity. So now, going into today, what is it that we're looking at? Well, we know that the bears are in control under the 50th SMA on the 1-hour chart. Also taking a look at the 30-minute chart. Same exact story. So the mindset is look for pops to shorts, play breakdowns of key levels if you can find them. But as Mo, I'm sure, will touch on later on in the show when he does his analysis, we're definitely moving into a more congested area as we have retraced this giant rally post FOMC. Okay, so we're coming back down into some pretty major support levels. We're now starting to back test what was a massive breakout, and so it's going to get a little bit trickier. So as far as actually trying to short this thing, you really want to be looking for confirmation and protecting profits from this week if you have them. And that's sort of my mindset moving into today. Hopefully the sell-off and the sell signal there on the system helped you guys to, if you didn't short, at least not be long. It was definitely a pretty volatile week, tough to trade. We could see that through the moving averages here. When the market trades choppy, they pretty much do nothing. But using the 1-hour chart is what was really important, because this was clear as day all week long. Support bounces until finally we got the break. And so again, using both the charts is why we could use this thing successfully. All right, guys, so that's going to do it for the system. Now for Ramsey Rippers with Bet the Bell. Do it for the system. I'm going to pass it over now to Ramsey Rippers for Bet the Bell. Good morning.
Good morning, guys.
Doesn't get old. That intro's the greatest. All right, guys, Bet the Bell. You know what time it is, Ryan. Let's pull up the green or red stats. Let's show the guys where they're standing. As of right now, we have a new king. we have a new king. Mander did miss an episode. They're still tied in the loss column, so we'll say he's a half game back. But we got a new king. Let's bring the king in.
My bad. We love that. We love that. I mean, I've been adamant since day one that I'm really one of Bet the Bell's top analysts. You know, I've been adamant about that, and I think that's going to continue. You know, I'm just going to try and continue my run of excellence.
Yeah, man, you're killing it. 63%.
This guy goes
damn
up
good hit
half
rate.
a game, and he's getting cocky. I'm shorting Diamond.
Jordan Diamond.
after
All
this
right.
year.
Let's go. Indices down a little less than 0.5% this morning. SPY, looking at it right now, down about 1.5 points. Bouncing off of 404 low, printed at 8 a.m. Green or red today, Alejandro?
I'm going to go red. Going red.
Diamond.
I'm going to go green. I'm going to go green today.
Why? Do you just want to do that as far as like a standing purpose, or?
No, that's not a tactical decision. I think I don't know. I have a feeling.
Snipe.
I'm gonna have to go with green today.
Nice. Mander.
Yeah, let's create some space here. No one likes the half game up off the bye week. I'm taking red. I would have taken red at the close, so futures being down ultimately helped. But I think that price action yesterday just leads into a continued sell-off here.
Gotcha. And Momama.
Red. That's a nasty close yesterday. Red.
All righty. Ryan, pull up the tweet that I sent you last week from yesterday from Unusual Whales. 46% of Americans think the nation is already in a recession. This is a pretty simple one. Do you guys think that we're in a recession? Noah?
No. I mean, a recession is 2 consecutive quarters of negative GDP. I think a lot of Americans don't know what a recession is, and that's why they feel that way. We're in a highly inflationary environment. I think it nailed the head on that, but I wouldn't call it a recession until we get to negative quarters of GDP, because that's what a recession is.
Right. And I believe we did have that. I think, what was it? It might have been Q2 and Q3 of 2022.
Yeah, it was last year. We dipped in there for a little bit, and then we came out strong. So technically recession, we had one, and then now recession over.
Right. And White House analysts and people across the political analysts across the board stated that we're still not in a recession. They kind of changed the definition, but that doesn't change, right? We were in a recession.
Definition doesn't change.
Mander.
Yeah, definition doesn't change. It's like them asking if they would ever raise the target rate for inflation. Things are set in stone here. Do I think we're currently in a recession? No, I'm going to take Diamond's boat here. Just that GDP just came back positive on the last quarter. So until we then get another back-to-back negative quarters, we're technically not.
All righty. We're going to go into our last question, a little bit of a different type of question for today due to a big weekend coming up. We got the Super Bowl. We got a bunch of Eagles fans in this chat. Or actually, we got one Eagles fans and we got a lot of Eagles haters. Or we got 2 Eagles fans. I forgot. Mander and somehow Mo. Mo is an Eagle fan. He's a Celtics fan. He's a New York Yankees fan. He's a Golden State Warriors fan. It's
Bullshit.
It's actually very, very interesting. So we got Mander and Mo. Got a big weekend coming up. Big Sunday, Super Bowl Sunday for the Birds. Alejandro, Diamond, and myself can't stand the Birds. But we're going to see what happens. We got a stock market Super Bowl parlay. Ryan, pull it up. Let's get it full screen. So I want the guys to take 3 picks. On the left, we have 4 market props. Apple over or under 150. These are all by the end of today. Google over under 94. Tesla to fill the gap today, 2013. And XOM over to close over 116. And then we got our Super Bowl bets. As you can see, the props to the right. And I also want the guys to pick a winner. We'll come back on Monday, see who did the best. I got a feeling someone's going to win a prop. So bring the guys back in. Who I want to answer first? Let's go Hondo.
All right. My question is, I have a question to you to start this segment.
Go for it. Yeah.
The Mahomes line, that's passing or total?
That's passing yards.
Okay. All right. So I'm going to go Mahomes under 288 total passing yards. I think this is going to be a gritty game, first off. And I think because Mahomes isn't 100% and he isn't as much of a ground threat, the secondary is going to be a little bit more prepared to defend the pass. If we could pull up the thank you, Ryan. So I'm going to parlay Mahomes under with Tesla filling the gap. And then I'm going to take the Chiefs to win the game.
All righty,
No
Sniper.
other reason that I can't stand the Birds.
Sniper, what you got?
I was going to take Mahomes under 288, but I'll take the under for total points 50.5. And Ryan, can you pull that up again? And I think I want to take the over for Apple 150. And I think that the Birds are going to win.
All righty. Diamond.
I will go with Apple over 150, which should have some good odds because they're at 149 right now in pre-market. I'm going to go Kelsey anytime touchdown. I think that's a lock. And then I'm going to go Chiefs, Kelsey, Apple over 150.
Yeah, I feel like that's just the biggest lock. Travis Kelsey, anytime touchdown scorer. It just happens.
Safe.
Famous last words.
Yeah.
Famous last words. It's a lock, right? It's a lock, guys. Mander.
It really is a lock. I'm going to take the same. It's got to be at like even odds here, and he's just got that dog in him. I mean, he's gonna score. Unfortunately, as an Eagles fan, I'm going to take Kelsey anytime touchdown, Apple under 150, and hammering my Birds money line for the parlay.
Birds, all right. Mo, finish it off for the boys.
Taking Apple under 150. Yeah, Kelsey and then the Birds. No doubt.
All right, I'm going
easy money. Easy money.
I want to pick Kelsey anytime, but I feel like I should, I kind of want a little bit of a better odds. I'm going Apple over 150. Give me Mahomes over the yards, and I'm taking the Birds.
Let's go.
It's a lose-lose situation for me. If the Birds lose, I love it because they're obnoxious fans. If the Chiefs win, if the Chiefs lose, it's great because I can't stand the Chiefs. So lose-lose situation for Ramsey. But you know what? I want to see Mander happy. It would be terrible for the Eagles to lose and Mander be in a horrible mood until August, September. The season starts next year. So we'll ride with the Mander.
We would be excited to get there, but job's not done. If you don't win it, you got nothing to show for it. History doesn't remember the losers.
Exactly.
We wouldn't want Mo to be upset either. He became a fan 4 or 5 weeks ago, Mo, when they clinched the playoffs.
This guy, man. I don't know where you guys got this. I'm a fan of every team. Let's go. A lot of haters here, guys. It's all right.
All right, guys. Great segment. I wrote down everyone's picks. We'll see what happens Monday morning. Alejandro, back to you.
Beautiful. Mo, we're going right back to you. Mamba market analysis. Let's do it.
Go ahead here and share my screen. It's massive. They were just infamous trend line right here. What the fuck, Ryan? Oh, you done fucked up. Can you guys see my screen? Hello? Hello?
Yeah, Mo, we can see it. You couldn't hear us. We're backstage. You're good. All right. In other news, while Mo figures it out.
Wait, are we back?
There you go.
All right. I don't know what's going on. All right, it's up. All right, so last BTB, what was the level we were looking at? 408.80. Where did I get that level from? This gap fill back here. You could see price action right there. Respected it on the close, and then CPI gap up, fell right through, right? And then what did we get off of it once we broke through? you got a clean break, the infamous break, hook, and go, right? So we broke and held, came up into what? Our supply zone up here, came back down, confirmed support, and looked like we're going to come up and retest this. Didn't quite get there, but this is bearish. Usually what you want is break, hook, and go and break your recent high for further upside, right? Maybe into here. Let me remove, oh yeah, right. So into this resistance right here, this 422, right? Your gap fill. We did not get that. We came right back down and fell through that level. We did confirm support and closed below. That's definitely bearish. If you're playing this on a shorter time frame, what are you thinking here? You're thinking downside. Let me erase this clutter right here. But you confirm support. You're looking for new highs, right? But you failed to even come up and test the supply zone. Came right back down. Nasty, nasty candle yesterday. And then you closed below your 408.8 level. That's your key level. So if we saw this on a shorter time frame, what are we looking at? Further downside. What I'm looking for is now to see if we can make a move down up to, let's say right about there. We actually bring it to this most recent price action right there. Okay, you can see the price action, how well it's respected this 400 point, let's say 656 level. So I'll look for a move down here, see if we're able to hold support. Ultimately, you do want to test on this trend line and see if we can hold. If not, you do have this major demand zone on the daily time frame. But we'll get there. We'll talk about it once we get there or once we near it. But for now, I am targeting 400.65. Let's see how that plays out. This is definitely a bearish close, really nasty close yesterday. And let's see if we get continued downside to end the week.
Awesome. Thank you, Mo. One thing that you said that I've noticed you saying a lot recently that I really like, think about the daily chart and think about the lower time frames, right? If we had that rising wedge breakdown on the 5-minute chart, it'd be a pretty obvious short situation, or you at least wouldn't be looking for upside. So using that on the daily time frame can really help to clarify things. It's a good point you made.
Yeah, 100%. 100%.
All right, guys, to wrap up the show, we're going to do today's top watches. Going to go to Money Mander. Mander, what do you got for us?
I got an interesting one here on Tesla. This is a zoomed out daily time frame, kind of a more macro look at the name. If you remember, I pulled this up right when we had that bullish engulfing off of lows there. We closed at 113. I said this completed that macro move to the downside. Now off that recent sell, we got to move back up to retest previous lows with a doji candle there that perfectly overlaps the 50 fib of the recent sell. So kind of 206, 207 there, got that inverse doji daily candle. I'm now back watching this one for downside. We'll see how this kind of plays out over the next couple of weeks.
Awesome. Thank you, Mander. And Mo, you wanted to share a top watch?
Yeah, sorry, dude. I am having trouble today.
Mo's moving in slow motion today. It's all right. It's Friday.
Go.
Almost there, brother.
Yeah, I know. So you guys can see my screen?
Negative. There you go.
All right.
Yeah,
okay, Tesla. I bet a lot of people want to hear about Tesla. So huge resistance. Check this out on the daily time frame. You can see the consolidation on the price action here and the bounces we got off of this, would say zone, right? Maybe up to 212.85 down to 207.5. Huge area for Tesla. You are expecting some pullback, and then you sort of develop. Yeah, you did develop your gravestone doji at peak here. Strong run up, and maybe if we look at our RSI, potentially overbought too. Overbought on the daily. So there you go. You got three points into this short. If anyone was looking to swing this short, that's what I would be looking at is, you have your doji, you have your candle. This is indicative of a trend reversal. So you got this at peak into what? A huge supply zone. And you're overbought on the RSI. I'm looking for some downside. My first target would be, I think we'll come through gap fill. This is a gap fill, 201.4, but I think we'll come through gap fill, but we'll come down here and touch this level. This is a really nice level. You could see here the price action, how well it was respected. 196.61. Let's see what we get.
Mo, we got some telepathy going on this week.
Let's go, bro.
Apple, Amazon,
fire,
NVIDIA.
huh? It's been fire. Oh, we've been ripping this week.
Out.
Yeah, you guys have been crushing it. All right, that's going to do it for this morning's show. Hope you guys all enjoyed it. For those of you that don't know, we trade live in the Kane Capital Discord all day, every day. You can go to kane-capital.com. We've got a 7-day free trial. Join, check us out, see if you like it. And we would love to have you guys. Other than that, trade smart, manage risk. It is Friday. Don't do anything stupid. Don't try to make your week in one day. And we'll see you guys back here on Monday. Excited to see how the Super Bowl plays out. Have a great weekend, everybody.
Easy.